Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So Bitcoin got a little bit of a push down, push up, and push back down again with some basically hack to the SEC account to say that it approved Bitcoin's ETF, but it was not true. It was quote unquote compromised, as they put a tweet out, causing this. Most likely it was a catalyst to clear out the limit order anyway, because if you look at all of the liquidity that is resting now on either side, they swept both sides, leaving it clear. And if we look here, it was a rejection off of that 47,327 mark daily resistance level, the 886 of this diagonal pitch fan. We've had price in for almost over a year at this point. Yeah, basically a year we've had price trapped in this pitch fan that we've scouted out from last year, and it's been respecting those levels quite nicely. So let's go to High Block Capital. What is High Block? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters are, so let's do it now. So with that little manipulation, they have been building some short orders as they came back. Well, first and foremost, let's hold ourselves to the flame of what we said yesterday. Make sure that we were on point with our analysis. That holds true generally an hour later. So, or a day later rather. So we came back up. We could not get above this B wave. We came back down. This makes more sense if you move it over here. And we basically came down to that C wave. It was a little bit lower than that, and then our D was over here, which was a little bit lower. So everything was a little bit lower in projection, but ideally came to those same points. We came up and down and then up again, and then now we're at this down point. So let's go ahead and delete this. We're on point with what the liquidity draw was doing. So it's possible we're coming back for a double bottom event if the ETF gets approved. There are some shorts up in this region to get obliterated, so let's go ahead and set this to max liquidity, figure out who is. There's a $401 million short that is open here. These limit shorts that opened up, $342 million character up at 48,413. Right now they are coming down to this $25 million long that opened up into resistance here, and possibly this character down below at 45.2. Okay, so cleared out all of the long liquidity imbalance. We had 9 billion imbalance on the 1 minute time frame, now down to 2 billion imbalance on the 1 minute time frame. So they went and swept both sides. That was like a reset, a lightsaber as we call it in the Momentum Master Discord. So this lightsaber knocked out both sides. Alright, so let's go see where it wants to go from now on the higher time frame. Let's expand our vision to the higher time frame pools. If you're looking for an alternative, which we will be shifting over to as well for High Block, there's a free one on coinglass.com, and you can go over to the liquidation heat map. And it essentially has the same information, not in as high fidelity an image, but basically like the 7-day here. So you can see what was swept up here. You had 66 million, 268 million that got gobbled up here as they surged up here, and then they came down and gobbled all that forthright. All right, so if we look at the higher time frame, it shows the same thing. They came back. We gotta set this to max liquidity. I don't know why High Block does that. All right, so 1.4 billion here, came back into this, still has this liquidity up at 48.3. that they did not sweep. We were looking at a total sweep of that zone up here. That's what we were looking at. They front ran it to the tune of 47,974, so they didn't quite hit 48K. Interesting. And yeah, so coming to the 7-day, there's still that pool up above, but you're getting that 42K thick range of liquidity down below if it does get rejected and put down to those sub 39K region. Starting to get some thick liquidity up in the 50K range now. Previously threadbare from December 15th, there was nothing up there. Now starting to get some thick interest, and this is how you see prices go higher, because the short sellers end up becoming buy stops to sell the longs to later. So it's all a tug of war, and whoever's on the most liquidity on one side loses. So does it look like we are coming to this 35K? Well, it depends on the news and depends on who's offloading their position. If it does get good news, you could pump up only to dump back down as everyone gets bullish the entire way down. They could use it as a good news event to sell into the news too. So there could be a good news event that pumps and dumps it down, because there's a lot of liquidity down below. On the higher time frames, if you look at the 6 month and above, you see this large amount of pool down below, 400 billion down there at sub 25K. You got 81 billion up at 52.4, 77 billion 51.6, 56 billion 51.2. You got all these $50 billion pools up in the 50K region now. Previously not as thick, so they've doubled up those regions since December 25th of 2023. So in a year's time, they've doubled up this region. Basically since the August time, it's been getting thicker up in this 50K region. So we could be seeing this hit to that March 30th 2022 range, hitting the 48K and possibly reclaiming it for BTC. Let's go back to the monthly. This is where the liquidity shows up the most, and go into this one. Let's try to compare it on the free alternatives here. If we go to the yearly time frame for the liquidation heat map, yeah, this doesn't have a 2-year one, so it doesn't have as thick of a band up here. But if you go to the 6 month, can you zoom in? No, you can't. So that's one of the alternatives here that you can't see. But it still works the same. Shows the same liquidity. And yeah. On the monthly and the weekly. So you have a large chunk of liquidity down in that 43K region. If it does get rejected, that's going to provide a proper C wave on down to that zone. Three-day. So unless there is some significant news in terms of approval, there could be a repricing to the downside here. Let's go ahead and take a look at the momentum here. Let's throw on our indicators. Link in the description for more. Momentummaster.info. Scroll down to features, toggle everything at your leisure to see Bitcoin's bottom over a year ago, before we knew it was a bottom, with our rocket ships on the stochastic array. You can read about it by clicking the buttons. trend cloud, baselines, and more dynamic alerts to your phone. And let's go into it. All right, so we were talking about the 3-day here. So the 3-day time frame ended up closing bullish here, and you're still maintaining these baselines. The similar thing we were talking about here is this cross down event. Does this cross down event play out similar to this fake out from April, where it crossed down to cross up to cross back down, but eventually gave a downwards 18% downside? Or we were saying it could be as easy as the July 24th, but we were of the mind that it would be more like April of last year. And so it's starting to come back up here. So you have 3 days for this 3-day to play out. Let's go ahead and take a look at how that's operating. The 3-day stochastic starting to come up here. The Williams in overbought status, holding the momentum to the upside. You had some hidden bullish here on the RSI as you came to this, making a higher low but a lower low on the RSI, giving you this 236 entry model for the bullish trend base fib to the upside. Coming to the daily time frame is ambiguously holding the range. You have the money. One thing to note is the money flow beneath the RSI here. So on the daily time frame, you have the money flow beneath the RSI. So this is suggestive of an insertion of money to bring it up to the RSI. Now this happens before, similar to here on November 23rd, 2023. You had some money flow beneath the RSI over here, and it shot up to the RSI. There are cases where the RSI comes down to the money flow, but most cases it goes up to the RSI. So this is suggestive of a bounce off the 706 here on the bullish trend base fib level to go back up to possibly that 48,226 level. So a bullish tonality on the money flow for the daily. One thing to note on the cloud here is we have bounced off the cloud, but the cloud is starting to thin and taper in a manner here. So something to watch out for as it tapers. Do we get an insertion to cause this to continue upward on an upwards path at that 2 o'clock angle or not? The daily time frame candle was a stopping volume candle, but we already ascertained that that's adding these two together in the previous 10, so that's probably why it wasn't a vector candle. Okay, if we go to the lower time frames, the 22-hour also has that money flow beneath the RSI. The previous time we had that was over here. So that was before we had this move to the upside. So do we get the similar path with this money flow coming back into the RSI on the 22-hour time frame? Coming to the 12-hour. 12-hour also has the money flow beneath the RSI, suggestive of this curveball pitch to the upside. We are currently holding that cloud. We had that inversion of the thinning of the cloud. We said you can cause an expansion off of that cloud and watch out for your shorts on Monday. And sure enough, it surged up. We're coming back to the trapdoor of the 706 of the bullish trend cloud, bullish trend based fib level at 45,874. Do we hold this 786 to come back up into that 48K region? You have a lightsaber wick on either side, Darth Maul candle. So do you have this continuation to the upside to recover the wick up here? Let's go find out in the lower time frame. Also the money flow, so the money flow on the 22, the daily, and this 12-hour suggestive of a curveball pitch to the upside with the money flow, and the even Steven levels on the 6-hour. You could be coming back for a double top on that momentum of the stochastic. The money flow and the RSI at even Steven levels. The MACD still open to the upside. Williams has yet to cross down. This is at an ambiguous point, but possibly also in line with going either way. The cookie crumbles with the subtle support of the 12, 22, and daily. Potential money flow to the upside. One thing to cause a pause on that idea is the 4-hour cross down event. Now if you get this continuation to the upside idea with the money flow coming up to this point, then it will cause this cross down to not be locked in stone. So how does this 3 hours and 11 minutes of the 4-hour close? Does it close with this intact, or does it turn into a green candle here? Asia is not known for sending it, but they could send it up here and close, and that will abate this cross down event on the 4-hour time frame. We wicked off of the cloud, which was a good sign for continuation if you have this rise retrace idea in mind. If you want to just look at this impulse only, you could say impulse and retrace down to here. This 45,629 is your daily support level as well. If you can hold this level of this 236 on this miniature impulse retrace idea, then you could possibly continue up into these regions. Some resistance levels at 47,764 and 47,542 in halfway within this wick, that daily support level from before. Alright, going lower. First looking at the oscillator, you're getting this alarm cross of the Williams. Is the Williams going to accelerate here and cause more downside back to recover this bottom wick first? That is the question. The money flow and the RSI at even Steven levels, with the money flow slightly beneath the RSI as the momentum comes down on the 4-hour. If we go to the lower time frame of the hourly opening up here as the Williams takes the momentum from the hourly away. Leading MACD coming beneath the 0 zone into the Williams domain. This is a leading MACD formula. The cross was back here on Tuesday and you never saw a candle close above that point. You did go higher, but it closed beneath it. Alright, so do we see an acceleration on the hourly to the downside? Let's go look at the liquidity to see who's trapped. Looks like they're coming back to that $25 million character on the 1 minute time frame here. Can we see them? We can see that $10 million. I guess that's 100 million if you 100 exit or you 10 exit. So they're coming into that 45,772 pool to liquidate. One thing you can look at on the CoinGlass chart is the liquidations. You can also see who is liquidated on the last hour. So there was a 722K person who was liquidated in the last hour. In the last 4 hours, 61 million. In the last 12 hours, 76 million. And mostly it breaks it down for you in the longs and the shorts. Good free tool to look at. You can also look at the funding rates for things and who is in the long-short ratio. Alright, so going back to that, currently you have a little bit more in long liquidity to come down to first. 45.5 is where it starts to lessen here. Alright, so let's go into the lower time frame of the 15, see if we can find levels to look at. So the money flow coming above the RSI here on the 15-minute while going sideways, suggestive of continuing lower down to this wick to create a double bottom of sorts. We're going to delete this idea, but eventually let's go ahead and look at this. So the 15-minute cloud got destroyed with that news manipulation of that fake hacked account, quote unquote hacked. So do you come back to this BPR fair value gap? This is also viewed as a fair value gap. You can look at BPR, balanced price range, fair value gap. It's not really balanced because it went up and down. I was looking at the footprints earlier. There's a lot of thin orders in here. There's a few players annihilated or removing their short, their sell orders executed, but for the most part there's a lot of areas within that are just nothing traded in that candle. Candles are quite interesting because it looks like you think it's filled with orders inside of here, but it's actually a few large orders sparsely populated within. So coming back into those, I'll have to look at it off stream. I'd like to have a segment where I have I go over footprints a little bit to give footprint traders a little bit more of an analysis here. Going to the 5-minute, so you're getting some bearish tonalities on the 5 and the 15, this continuation idea possibly coming to this wick down here at 45 or 44,752. So you have this little auction here between 47,966 and 44,752, and we are attempting to offer some prices when it swept both of these ranges, came all the way down to here. This is also not a coincidence that it came down to this wick, basically coming to this order block idea here. Within Momentum Master, we also have order block finders built in. You can turn that on at the top here. It will automatically give you that order block that it came back into here. So it wicked into an order block here. There's a bearish one up here if it does reject at 47,152. Here's another one that just formed, but pretty interesting nonetheless. On Momentum Master A, not advertised on the website, but there nonetheless. All right, let's go to the broader markets and come back and make it in a nutshell. Let's go see what total's up to. Total holding the range a little bit more, holding this cloud on the 15. So this cloud is bullish on total. Total 3 also holding the cloud here on the 15, potentially coming up. Bitcoin dominance dropping as it gives the alts a little bit more as people take their profits out of Bitcoin and possibly see some alt plays here. The USDT dominance played a little bit of wick-wacky action here, but ultimately getting this pushed down to the downside as people put their money on the table into trades. Okay, came back, knocked people out, but ultimately possibly coming down further. So one thing to note on this 4-hour cloud is that it is curving in a manner here suggestive of coming down lower. You rejected off this cloud, so coming back into this narrative of coming back and inserting some money back in is seeming to line up with that idea of things going up more. On the 4-hour time frame, this cloud needs to have candles close with conviction above it for that to continue on the total market cap for the alts. If you cannot get above this cloud here, you're coming back down into the deviation level down at 463 billion. Looking at Dixie wicked into our fair value gap here and rejected hard off of it. We said it was suggestive. It basically went sideways, did not go up or down. Basically in a range here, range bound for the dollar. Essentially, there's no cloud to reclaim because there's no volumetric read on Dixie, so you cannot read the volume. So this is one way to test if an indicator is actually reading volume, because you will, for example, market cipher B is one of the leading ones, then it will show a volume thing. But if you look here, there's no money flow because there's no money aspect to the Dixie value. So yeah, that's one thing that got me to question what that formula was about. And it turns out it uses a SMA and it's not volume related at all, but that's another story. But yeah, coming back above the weighted moving average here and rejecting off the adaptive. If the Dixie gets a rise here and comes up back into this gap, we already picked into it, but if we come back and properly reject off of it, then we could be coming lower. As of this moment in time, if I had to make a call, it would be that it's coming back down again. There's this gap. We wicked into the gap here. We wicked into this gap, but we still haven't really dug deep into which draw we're going to go. So if we come down into this, then we could basically and respect it, then you could basically be coming up to the draw here. There was a clean rejection here with this wick, so I'm more of the mind that we come up into this region and sweep, come up into an order block here, and then maybe reject into that. So if this goes up, then things will go down. But we could just trade sideways in this region while the other assets do their thing. Nasdaq got a bit of a rise yesterday, continuation. They broke out on Monday during the open without retracing so much for even at all, and everyone was scared to enter, and they just reclaimed everything that they did from Tuesday of last week. So now it's back into a bullish territory, and they could come back and reject off of this, but most likely coming back to reclaim these highs. So as it stands right now with Nasdaq, you came back into you came back into this 4-hour fair value gap, and it's possible that you come into a lower time frame here. Yesterday was the retrace idea, and it did not really retrace at all. It held that cloud on the hourly, and it looks like we are possibly going to break through this and turn that into a quote-unquote inverted fair value gap. If you look at this and narrow it down on the hourly time frame here, you have some other levels to look at, some ideas to reject off of if we do that for Wednesday. So do we come up to this region and react off of this region? The draw though would be all the way down here, so this is a breakaway by the looks of it. The way they traded on Monday was a breakaway gap, so this is looking to come sweep up these highs by the looks of it. But they could meander around, retrace back down. Looks like it traded pretty fairly in this range, so could just trade and meander around here on Wednesday, and then maybe Thursday, Friday kind of come up into this region. You got a bunch of news on the horizon as well. If we go to Forex Factory, should always plug into that first and foremost. You have some CPI on Thursday, that's the catalyst news on the 11th, and PPI on Friday. So you got some red folders coming. You got a 10-year bond auction on Thursday, basically tonight. So you got a few high impact news events coming soon that will probably have the dollar do its thing. We only tapped into that. It wasn't enough to give a conviction just yet, so most likely coming back into this region for the dollar. If the dollar goes up to that region, Bitcoin will have a little bit of a downside turn. So what is this downside path that we are on? Are we going back? Ooh, they popped that. Somebody opened 48 million right there and they got immediately devoured. So somebody opened a $48 million long, and they just came right back to that person there at 45,778.
Fatality.
And so, yeah. Do they come down and sweep this wick up and come back to this 96 million at 44,877? Or do they go higher into the 401 million up at 47,309? That is the question for BTC. As it stands right now, you're curving the hourly time frame cloud and you have no signs of abating just yet. So you still have some time for the news of the ETF approval or not. So I would suggest chilling on the sidelines, not financial advice, but do you, avoiding whatever volatility wickwacks both sides. But by the looks of it, it looks like it could come back down for a double bottom idea as it rejects this hourly cloud. Let's go take some comments, questions from you guys, and then we will try to wrap it up in a nutshell. So as it stands right now, you're rejecting the cloud on the 5-minute, and you have this cross down event, so I'm of the mind that it's continuing lower. So I'm thinking that it comes down to recover this wick at the bare minimum and possibly look to reclaim some liquidity, and then at that time maybe you have this double bottom idea to come up and go to those new highs. So what we'd want to see is a reclaiming of the cloud at some point like this, and then this interest zone confirmation idea would be something more suitable to a long. You have this wick, and possibly coming to this idea would be something more of what I would be more willing to pull the trigger on. But as it stands right now, the 15-minute cloud is not on your side. You're not really respecting the baseline cross-up event here, so coming back down again for that double bottom idea. If you come to the hourly cloud is disrespected. We have a bearish retest, possibly coming lower. Cross down of the 4-hour, we'll see how that closes, as we said, in 3 hours time. Does this get, does this cross down of the baseline on the 4-hour lock in or not? We previously got a bounce off the cloud. We talked about the levels to respect for that 236 idea. Basically 45,651. We have to remain above that point for bullishness on this little impulse retrace idea. Let's go see what's up. Any questions, comments? No? So that's what I would like to see personally, is some sort of double bottom event coming down for that wick recovery, and then seeing where it goes from there, what interest is generated down in this wick. Oops, I just deleted something. Yeah, that was this one. So we're gonna see what that pool is one last time. So there's some 50xers and 100xers down in there for the longs. They could come back to, as the long imbalance is still $2 billion imbalance, 2.4 billion imbalance. So they could come back down into this 96 billion, 42 billion, or 46 million, 42 million, 121 million. These 100x pools down here that grabbed that wick, they could go punish those guys one last time, put them in fear, give the shorts some security, and then bounce off of them. There's even more down at 44k even that they could come back to as well. And that is my story, and I'm sticking to it, looking for a potential double bottom event, but in the interim, more downside, at least into London for BTC, as the dollar does show strength as it holds the range and potentially goes higher into some fair value gap recovery zones, which they previously only wicked into. So they traded pretty fairly down here, but they didn't trade fairly up here, so coming back into this to test it and causing the risk on assets to take a little bit of a tumble. Nasdaq could go sideways here too and give a little bit of a seek and destroy pattern before they come up to that region. So we will see how that plays out, but eventually the draw will be up into this region. When is that going to occur is the question. And that's my story, and I'm sticking to it, folks. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the flip side. Peace.